Beat, a live show where we cover the stock market, financial tips to get your dough straight, and sometimes Disney World. Wait, seriously? Disney World? All right then. The Closing Beat, presented by Jazz Wealth.
Yeah. Hey, love that song, man. That's a good song, man. Hope you're having a great day out there. Welcome to The Closing Beat. We are financial advisors here at Jazz Wealth and just trying to be like laid back. We work with Goldman Sachs, and so our custodian is Goldman Sachs. If you work with us, your money goes there and stuff, so we can't steal it because that's a thing these days. But we try to like take that suit and tie approach and be like, we're just normal people, right? You just see who we are, see if you like us, and if you don't like us, then man, why? What happened? What's going on there? Speaking of not liking things, did you see the stock market today? Kind of a big area, right? It's a real key decision area here for the stock market, and I'm going to cover all of that there. The current stock market, there's ebbs and flows of moods, and the moods are driven by the Fed, driven by Washington, driven by maybe catastrophes and things going on around the world. And so right now, the stock market is taking economic news and saying bad economic news is good economic news, or good stock market news. And so the trouble is this week, there's really no good economic news. So if we know the market's reacting to that, we know the Fed won't be here till next week. What do? Well, kind of what you've seen here today, right? The trouble is that now we start to have bad economic news and bad company-specific news. So all the layoffs that happened in the tech sector and all that, I talked about that yesterday. We get that. Okay, we'll give you a pass on that because you guys overhired, you pay too much, it got really competitive, and it was a saturated market. That's fine. But now, yesterday we had Pepsi, and we talked about that. Ooh. Now that's getting a little worrisome there. That's supposed to be a non-cyclical type company. We're going to drink Pepsi and Mountain Dew and all of that. That sounds good. Whether the economy is good or bad, right? Morgan Stanley. Now we're going into the banking sector, Bank of America today. So it's like, oh, okay, maybe bad economic news and bad company-specific news is just bad news. That's kind of the vibe that you're getting out there. Pretty tough one there. But let's get over here and talk about the S&P here. So we're already down 3% month to date. It's only the 7th. Oh boy, right? So that's a big loss. I said, well, how big of a loss is that? That ranks as, well, let me use this. We use the SPY. Being down over 3% ranks as the 20th worst start to a month ever in the history of the SPY. And that goes back to 1993, by the way, there. There's only two other times where the first 5 days in a row of a new month were down. And if you want to look and just sort of fact check me on that, it's February 2002 and June 2011. The bad news is, if you look forward 3 months, 6 months, and so on, the market was lower, and by quite a bit. So granted, it's only 2 data points to use, but yeah, not a good sign there. If we look around the markets here, you got the XLE down the most for the start of the month here, down the most, about just over 6% there. And then if you look around the markets a little bit, I know you've been waiting for your financials to pull back. You're getting it, down 4%. Other areas that are down 4% are going to be tech, however, not as strong as the financials, and consumer discretionary, which is the weakest of all of them, weakest of all of the three, and also down 4% as well. But that has a bigger year-to-date loss there, so you're gonna struggle to get yourself excited about that one there. Back to the market here real quick. Today, the stock market kind of struggled to find a direction, right? It was positive, negative, positive, negative, positive, negative, negative. All right, fine. The performance of the market would have likely continued that way, but remember, a man-made time has decided that 4 o'clock is when the stock market closes, 4 o'clock Eastern. Well, where we're at right now is we have a big old downtrend in the long term, but now we have a perfect uptrend in the short term. This is known as a wedge. If I were to draw a line right here, you would see a well, a wedge, right? That's what they call it. So now you're stuck with the decision, do I trust the short term and assume that this is going to act as a floor or some kind of support, or do I trust the bigger picture and assume that this downtrend is going to continue? Not an easy decision there if you're a person that likes to buy counter trend out of a downtrend there. Very, very difficult. This week, our Wine and Wealth, we are going to review our new retirement planner. It is going to be live for everybody, and we're going to go through and do some scenarios. We're going to take questions and everything. We just chose to build our own instead of going and buying some software or using some third-party software. We built our own. So I want to share that with clients. I want to go over things and answer questions there. Made it really simple. It will be in your portal. If you don't know, we decided a long time ago that we just want to give people what they want. We don't want to give people what's available. So we decided to build out our own portal and everything. And so we'll join you in the portal. You'll be able to click around and actually play with it. Really, really excited about that there. So I hope you will be excited about it as well. If we look through the rest of the markets, the NASDAQ is the weakest, continues to be the weakness. The Dow has pulled back and is continuing to pull back nicely. So you got that decision there. Is that an easier decision, by the way? It's an easier decision to buy the Dow's pullback than it is the S&P's pullback, or especially the NASDAQ, because you've already broken the downtrend. So you're assuming there's more strength there and that pullback is buyable. If you're curious, you don't have to guess that the next bounce will then also break the downtrend. So a little bit off topic there. If we look at crude oil, crude oil made a new low there. It's back to, well, not a new low for the year, but it obviously made new lows here today. It's back to this lower price range here, and it's trading in what's known as contango. So we covered this before, backwardation, contango and everything. It just basically means that the front month contract for oil futures is cheaper than the next month's contract. That next month would cost you more. What does that mean? We're trying, remember, we always look at something, we teach some data points, teach a study, and then go, well, what does that mean for you? What do you do there? Well, if you're a speculator in oil, or you're in the actual business of oil, it's, by the way, this is WTI or Brent. They're both in contango as well if you're more advanced out there. It means that you would just hold the oil. You would just physically store it if you kept it in its physical possession, or you would just hold your position and wait to sell it in the next month, or you would go sell a futures contract against the next month there. So what do you think that does for supply? If oil is trading in what's known as contango. Maybe that's your word of the day. If you've just hearing that for the first time, maybe check that out and think about what that would do for supply. If I said, I have a bunch of oil, I was about to sell it, but I see next month is more expensive, I'm just going to hang on to it. What happens? Does the price eventually go up, or does the price go down because there's less oil? Lesson of the day. You want me to give you the answer? Do ya? All right, let's look at the TLT over in the bond market. Massive rally here continuing there. It's up over 15% in a month. Think about that for a second. If you are in this market this year in a target date fund, a bond fund, or a stock, any kind of equity fund there, this rally in the bond market has only happened 3 other times in history. You are living through some of the wildest times that anybody has ever been able to participate in when it comes to stocks versus bonds there. Actually, I want to show you something here. So here's the correlation between, I'm using the NASDAQ in this case, just I don't know why I chose that. Correlation between the NASDAQ and the bond market. They're almost perfectly correlated. You can't, meaning you can't win. If one goes down, they both go down. So if the equities portion of your target date fund goes down, your bond portion is also going down as well. This is what it normally looks like. And you could insert the S&P for the NASDAQ here. The purple line is the NASDAQ. The orange is the 20-year. They normally are inversely correlated. When one does bad, the other helps support, right? That is horrible. The light at the end of the tunnel, by the way, it's starting to get more inversely correlated, but you see how this is only through this month? So maybe we're starting to do something there. Way too soon to tell. But I did want to share that with you because holy cow, man, look, this rally, of course we'll take it, but this rally, it's beyond wild. Like you just lived through the most amazing kind of, well, you could say the weakest down move in the shortest amount of time ever for bonds. But also now we have the fourth strongest rally ever in bonds. So if you look at your 401k and you look everywhere else and you say, well, that seems like it's moving around a little bit more. You're right. good job. You picked up on it, right? You're able to kind of see what's going on. This is so interesting because a lot of us are just going around our lives going, everything's fine. Yeah, they're just doing good. I'm fine with that. But meanwhile, we're going through history here in the stock market, but mainly in the bond market there. Really, really fascinating there. What's also fascinating is you guys are spending some money out there. This is a little off topic, but last consumer credit data number came out, and I'm sorry, that's my fault. Basically, the Fed came out and said, in September, consumer debt went up at a rate of 6.4%. Consumer debt, officially $4.7 trillion. That's the first time that's ever happened. Well, that number came out today. That'd be to get the more current number, and it's only going up. So consumer debt is really, what are you all doing there? Getting a little out of control. Hold on with your dough a little bit, would you? All right, so we got stocks in the news here today, and then we'll get out of your way. You got BlackRock. We talked about this a little bit. It's not really moving around a whole lot. You have an activist firm, and I'm trying to find the name of it. I don't recognize them. So it was an activist firm, a smaller one, Bluebell Capital. They're looking to get rid of the CEO of BlackRock because of how they're scoring the environmentally safe type stocks, or those that have the ESG score. They're not doing a very good job of that. I would agree. There's a lot of companies in there that really are doing nothing towards that. And if you disagree or agree, whatever, but they're still monitoring this, and they're just not doing a very good job. And they blame the official CEO. Larry Fink's been there for a long time. You got Lowe's. We happen to own Lowe's, so happy to see that. It's up 2.5% here on the day. What happened with Lowe's? This was not earnings. This was them reaffirming their earnings projections going forward. But then also a $15 billion stock buyback program, which puts it at about 10 to 15% of their total market cap there. Good job, right? Because what do people want to see you do in a weakening economy? You now know, I'm like a broken record. They want to see you give money back to shareholders, buy back your shares, pay a higher dividend, all of that. See, another scenario where we know the current mood of investors just by looking at something that correlates. We know that they want to see that, and when the company announces that, stock price goes higher. So well done, Lowe's. Like I said, we own it, so I'm happy they've made that decision and did not decide to build more stores. They don't need more stores. Mastercard's in the news. Very similar thing here, actually. Was down on the day. They go, hey, guess what? We don't want the stock to go down anymore. We're going to do a $9 billion buyback. Stock reverses. Right back on course there. Again, another way to just tell the mood of what people want to invest in here. Campbell Soup, killing it. Apparently people are buying Campbell Soup. We got a brand new high here. It's one of the best performing consumer staple stocks in the food category that's out there today. Up 6%. That's brand new highs. You don't need me to tell you. It's outperforming the stock market today. So way to go. You got Altria. They're settling. There's actually a global lawsuit against Juul, which they own the majority of. And so they're settling that lawsuit. Why did the stock not go lower? That's the lesson there. We've talked about this from other lawsuits that have happened, Amazon and the like. The stock market or investors like to know the number. As soon as we know the number, we can tell the impact that that has. Excuse me. You can tell the impact that that has on your bottom line, or however you're going to spread that out over your balance sheet. So that's why Altria did not move lower. Toll Brothers, there you go. So Toll Brothers, 7.75% on the day there. Better than expected earnings. They see deliveries of total homes ranging between 8,000 and 9,000 homes, and that's above expectations. They handled this perfectly. It's a new addition, a somewhat new addition to our portfolio. It was our second best performer here today, in all of our portfolios together. So happy to see that. And this goes back to last year when they started saying ahead of time, we're not going to be building as fast, when everything was really strong and everybody thought they were nuts for doing that. Turns out they were geniuses. They did a great job there. Tonight on our Jazz After Dark, we're going to talk about pairs trades. And I'm going to pick on something that it's kind of a pet peeve of mine. People go, I just did a pairs trade on Home Depot or Lowe's or whatever, and you did it wrong. So we're going to go over exactly what that means using a real example and try to explain to you if you want to do something like this and have another strategy in your arsenal there. There's one thing you need to keep in mind, but if you mess that up, then the whole thing doesn't work. So it's not a tease or anything. That is purely a fact. You know me and my data around here. So join me tonight, if you would. We'll hang out and do that. Tomorrow, we've got earnings from Broadcom, which typically does well on earnings day. 7 of the last 8 earnings days, it was positive, so that's good. You know who doesn't do well? I believe they report tomorrow. That's why I'm coming up with it. It's Chewy. So Chewy, 7 of the last 8 earnings reports, they were down. So it's the exact opposite of Broadcom. Different sector and everything, I get it. Costco, DocuSign, Lululemon, Restoration Hardware, or RH, and Vail Mountain Resorts will be reporting tomorrow as well. I'll take a second here and try to answer your questions. Otherwise, I'm going to get out of here because I've been told we have a guest coming by today. So we'll see. Yeah, Contango is not the prison dance. I like the way he said that, though. Chris says, I'm done with this, man. I'm tired of living through the wildest times ever. Well, to be fair, it has been selective. So it's not like 2008 where it was the wildest times for everything. There's a lot of good out there still. But if you're in the bond market and that's all you did was invest in a bond market, ouch. Yeah. Mm-hmm. I love it. Sorry, I missed you there. Thoughts on M&A activity this year? Do you have any concerns about them overpaying for future production? They've already started saying that they're going to back down from a lot of that. They took the same page from Chevron. So Chevron was a similar thing where they said, we're interested in M&A, we'll do it, but it's got to be at our price. And you're starting to see that pop up a lot. Goldman Sachs said the same thing about some of the crypto sort of mess that was spun out of FTX. They're like, well, hey, that was a good company over here. This other little guy that did business with FTX, they were decimated by FTX, but the bones are still good. And now that the price is right, we're willing to spend a few dollars on it. So FANG has taken the same approach as Chevron in that case. I don't know if it gets rewarded, though, if things get a little worse out there. Giovanni bought yourself some Salesforce. What'd you do with the Salesforce there? Let's take a look. So Giovanni bought some Salesforce. You like your discounts. That's right. 10 shares, 133. Bought 10 more today. 130 is the bottom of the downtrend channel. That's a tough one because you have really no support there. You're hoping on that being the downtrend channel. That's a fresh breakdown. So if you go over to something like this, you got a fresh breakdown here, which is why you have all that volume on the day that everybody was just giving up on the stock and you jumped into it. So typically you don't see those just reverse course and provide you with the riches. So you might have to hang on tight there. Mm-hmm. Yep. Oh, it is. You're right. Where did I just see that? Jobs report. Does what's the version of that coming out this week? No, Fed next week. They're going to be responding to all that. Got a little backed up on my days there. 88 Cipher, new name there, it looks like. Thoughts on put-call ratios or somewhere that you can find that information for individual stocks? Yeah. I don't know what platform you use. I will say not all platforms, but yes, you can look at that on individual stocks. Absolutely. Take a look inside of your platform. If they don't offer it, then maybe it's time to move on to somebody a little bigger. Yeah. You're very welcome. What effect will the $60 price cap on Russian oil have? Not much. Not much, sadly. And there's probably going to be a lot more coming out as that pertains to them, because I don't think we're all just going to say, okay, yeah, that's good, we're done. I think there's going to be more jibber jabber. We got Spy Giovanni says, oh, before Fed Day. So you got a timeline on it then. So you say 400 by Fed Day. So all Giovanni's doing is saying that the bottom of this uptrend here will support itself, and that'll give us a nice rally, maybe sounds like you think into the rest of the week and then the beginning of next week. Yep. Financial Wisdom, what do you think the 50-year oil deal with China and Saudi Arabia? Didn't really read about it. Didn't really look at it. I'm more concerned with we actually follow the global supply of barrels per day in the market. So I don't have any comment on that. Couldn't say that I'd be smart enough to answer it. And that's what was the show that used to say that? And that's something. That's how the cookie crumbles, right? What's that from? Can't remember what that's from. Right? It's something. And that's how the cookie crumbles. It's like from a movie or something. Now it's gonna stuck in my head. You got it for me? Bruce Almighty? That's right, Bruce Almighty. I never saw the whole movie, but I got enough of it. Okay, well, that's it. I don't have any cheesy sayings here to wrap up with you. I do want to wish you a good holiday or something. So if you didn't see, we brought in a special friend to actually help us sort of convey our emotions and feelings to you guys for supporting us all year and joining us. So without further ado, the man himself.